let's get to it, man. As always, welcome everybody tuning in to Tim's Tidbits. We've been this week 5. We've been going a little bit over a month now. This is our investing journey. I'm just sharing. I don't consider it teaching. I'm just sharing stuff that I've learned along my investing journey. Sorry about that hitting the mic. And hopefully it'll help you and inspire you to go into your own investing journey and try to get to this financial freedom. As always, y'all know what it is. The disclaimer, got to put it out there. I am not a financial advisor. I am not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decisions. And like I like to do, I like to stop it right there and come out of stop sharing and look at you straight in your face so I can say, now that that's out the way, don't think that what I'm putting out is not good information because it's changing my life and I see it changing other people's lives that I follow, and we can do this. They done let me figure out we can do this, man. They done let me figure that out. Then we gonna get back to the slides. Okay, it's good advice, it's good information. So, you know, uh put it to use. Today, what we talking about today, Tim? In the past, we talked about where to get started. We talked about a whole lot of stuff. Go back and look at the videos. The YouTube links will lead you to it. But today, we talking about options. As many of you may know, all of you may know, I'm an options trader. Don't really do the short-term options trader, do the long-term options. But I'm an options trader. I know you hear me talk about options all the time. So, what are options? Options are contracts that let the buyer control 100 shares of an asset. I say it again. Options are contracts that let the buyer control 100 shares of an asset, right? So, how does that work? How does it work? Okay, options is it give a contract. It's a contract that offers the buyer the opportunity to buy or sell the underlying asset at a future date for an agreed price. Now, what they when they say buy it at a future date, that's what they call exercising your option, because you're buying a contract to say, I want to buy company XYZ shares at this amount at this day in the future. And if you get to that day in the future and decide you want to buy those shares, you would do what they call exercising the option. But most people don't exercise. Some people do exercise when they really want to get a stock at a low price and they want to get it sometime in the future and save the money until they get it. They'll buy an option when the date comes, then they exercise the option and buy those shares. But I don't do that. I just trade options. That's all I do. And we're gonna get into how you make money on trading options in a minute on future slides. Okay, so that's how the options work. Now it's multiple strategies. It's a whole lot of different strategies on using options. This is just the way I use it. One simple, very simple option strategy. And it's like I buy calls and puts. I just buy calls and buy puts. They got all these in-depth option strategies that you can do, but I don't do all of that. I just buy calls and I buy puts. And what are the contract types that I use? Well, there's only two contract types. You got calls and you got puts, and you can buy calls and sell calls, buy puts and sell puts. But I ain't gonna get all into that. We just talk about buying calls and buying puts. And when you buy a call or buy and put, that means you're going long net position. That's a whole bunch of terminology that you really ain't got to worry about now. Just remember, we talking about buying calls and buying puts. And what are calls? Calls allow the holder to buy an asset at a stated price within a specific time frame. And if you buy a call, that means you're bullish on the stock. If you ever heard the term bullish, that means you want the stock to rise in price. You want the asset to rise in price. You need it to rise in price if you buying calls. Puts allow the holder to sell the asset at a stated price within a specific time range. And if you buying puts, that means you're bearish on it. That means you want the stock price to go down. You want the asset price to go down. So you need the asset price to decrease. And I've been told where they get the terms bullish and bearish from is because bulls, when they hit you with the horn, they lift up. And bears, when they strike you, they strike down. So bulls want the market to go up, and bears strike, they want the market to go down. That's what I was told. I don't know if it's true, but it makes sense in my mind. So um contract costs. What do now contract costs is related to the asset cost, but they got their own pricing structure. And contracts represent 100 shares of the underlying asset, like I said before, and the buyer pays a premium fee for each contract. So how does the premium fee work? So when you go out there and you look at your strike price that you want to buy, and we'll get into what the strike price is in a minute, you look at it and it says that the option premium is $3 for that strike price. That means you got to put up $300 per contract to buy an option for that strike price. It don't matter if it's a call or a put. If it's a $3, you got to put up $300. If it's a 35 cent, you got to put up $35. It's everything times 100. It's whatever that price say times 100, and it's the same way when you're buying it, and it's the same way when you selling it back to close your position. So it's everything is time 100 when you look at the premium cost of option contracts. And it's a whole bunch of Greeks that's involved with options. Study them, learn them. I give a look. I'm giving a extra little tool later on that I learned like a lot of stuff about the Greeks from this free resource. But these are the three Greeks that I mainly pay attention to: the delta, the gamma, and the theta. And the reason why I pay attention to the delta, the gamma, and the theta is because it's about the price movement of the option contract. The delta is in all of them except for the theta is in relationship to a dollar move of the underlying asset cost. So the delta is it represents the rate of change between the option price and a dollar change in the underlying assets value. The on the calls, it go from 0 to 1. So you will see like 0.01, 0.02, 0.2. It go from 0 to 1. And on puts, it's the same thing, but it's just negative. It'll be like negative 0.01, negative 0.2. And then on the gamma is the amount that the delta is going to change with every dollar move of the underlying asset. And then the theta is the time decay. That shows you how much your contract is going to change based off the days that pass by, all else being the same. If don't nothing change about the delta, the gamma, and all of that stuff, then every day that pass by, your contract is going to decrease in value by whatever the delta say. So with the let me stop sharing for a minute so I can get into that, because I know that's kind of deep there. So with the delta, if you see a 0.50, right, that means for every dollar the underlying asset move, your contract should increase 50 cents per dollar that your underlying asset moves. If it's got a gamma of point 1 or a gamma of 0.2, then every dollar that it move, you're gonna add an additional point whatever to what the delta move. So if your asset move $5, then it's gonna be the delta times 5 and then the gamma times 4. Because after the first dollar, then that's when the gamma kick in. So that's how much your stock, your contract should grow in value for every. And then on the other side, when it go down, that's how much it'll decrease in value for every dollar. So as the delta move, and you can kind of, I use those. The reason why I use those is to kind of estimate how much money I should make over a certain period of time if it get to my strike price. Now, mind you, now it's just an estimate because the delta is always changing, and as the price of it goes up, the delta goes up, and so it's going to constantly be gaining more and more. But you can just use the delta in the gamma as a baseline to estimate how much you should make if you get to your strike price within this time. Just give you a ballpark figure of how much money you should make on your investment, and that's what I use the delta and the gamma for. And a theta, if don't nothing else change about it, the theta either way. So if it's like a 0.1 theta, so every day if nothing change, your delta don't change, your gamma don't change, the price don't change, every day your contract gonna be 10 cents less in value, 10 cents less in value. Let's call the delta either way. That's why I do long-term options, and I cash out well before the expiration date, because once you get within a week or 2 weeks to your expiration date, that theta start eating your theta, jump up to, it may be like $7, $8, $9, $10 a day. The closer you get, and the more contracts you got, it multiplied by, it multiplied by every contract. All of those multiplied by everything about options. It's this times the number of contracts that you got. And so I breezed through that real quick. Talk about it. The slides gonna be available as always, like I always do. They're gonna be available as always. But what I'm gonna do right now, I forgot to text myself the images to show it on the app. But I'm gonna go through my platform of choice and show how I actually go through and decide what strike price I want to get, and how to actually purchase the option itself. So let me give me a minute. Let me get into this account and pull up this old account I got, because I don't want nobody all up in my wallet trying to see how much money I got. I want to be in my wallet trying to see how much money I got out here in these COVID streets. Let me log in real quick and then get it, and then I'm gonna go through the exact steps I use when I'm going through and picking my contracts. Okay, going back to sharing my screen. Let me get back to sharing my screen here. So while I'm pulling this up, anybody got any questions about what I was saying so far? Just unmute and ask away.
Question. Are you saying that it's probably best when you have an option to sell it before your strike date?
Oh yeah, it's definitely best. You don't even want to get close to, no, not the strike date, the expiration date, but you don't,
Expiration date. I'm
yeah,
sorry. Yeah,
you
expiration
you
date.
don't even you don't even want to get close to your expiration date. Like, that's why I do long-term options. I buy them a year, at the shortest a year out, but you try to get 2 years out. And if you buy it for a year out, I'm trying to get out no more than a year and a half. I'm getting out even less if I hit my percentage before then. If it's a year out, I'm trying to get out anywhere from 3 to 6 months. If it buy it a year out, I don't even want it to get close, because I don't want that theta eating away at it, and then I don't want to be the last one at the party. Because when you be the last one at the party, you got to find somebody to sell that option to. And if ain't
Thank-
nobody trying to buy it, you know what I'm saying, you stuck holding the bag.
Gotcha. Thanks.
Mm-hmm. And then I'm gonna go back. Any other questions? I'm about to go back to sharing my screen. Any other questions?
I'm gonna send you $1,000 in like 5 days.
No, sir,
Put,
nephew. You see
put
the
it.
first. You see the first slide. It said, "I'm not a financial advisor or a fiduciary."
What? This you financially advising us right now?
I'm just sharing what I do. I'm sharing information. I ain't teaching or advising. I'm sharing information.
He's sharing information. He's not advising.
Any other questions? Okay, I'm gonna get to sharing the screen. I'm gonna go through my exact process. We got about 15 more minutes. I'm gonna go through the exact process on how I do it, so you can see how I do it. And if you interested in doing it, you can apply it to your investing journey. I'm showing you on Ally, because that's the platform that I use, but options work the same on everybody. It's just all about figuring out where the buttons are on your platform, and how to what to click. Can everybody hear me all right? I see Cuz leaning in. Do I sound low?
Oh, you good.
Okay. All right. Sharing the screen. Yes, sir. Okay, so I talked about barchart.com before. This one of my, I be on here the most when I'm doing anything. Now, the way I pick my strike price is something that I got from the Come Up series called the Strike Price Formula. If you go on their page, I always talk about them. You go on their YouTube page, and it's on the starter pack. It's the exact video in there when they discuss the strike price formula. So I ain't gonna run through that. That ain't my thing. It's something that they share free with the world. And if you want to learn how to pick it, how to use their formula, go to their page and they'll tell you how to do it. But what I do, I use the strike price formula, which it just consists of looking at the price of the asset, dividing it by a certain amount, taking off a certain amount for pullbacks, and then adding that to how much it costs now to pick what price. And the strike price is what price you want to quote unquote buy or sell the asset at in the future. And so that's your strike price. And you want, if you're buying a call, you want the asset to move up to your strike price and go even further beyond. If you're buying a put, you want it to move down to your strike price and go lower. So what I use barchart.com for, I come to barchart.com. We talked about this before, how I use it. I come to over here on the left-hand side, the top left over here where it say quotes. I click on price performance, and you can do the same thing on your phone. And as you see, it shows you the price performance over 5 days, 1 month, whatever. And then I look at the 2-year price performance, and over the last 2 years, it's gained 81%. It's gained $58 over the last 2 years. So I do the strike price formula, come up with it, boom, bam, boom. I come up with a strike price of 170. I'm just giving you a number so I can go through it a little bit quicker. So I come up, my strike price I want to get is $170, right? So then I'll come to my platform, and y'all know in the past we already talked about going to stock charts to figure out when is a good time to buy, looking at the seasonality of it, all that. We went through all of that in previous videos, but it's a good time to buy. It done pulled back, seasonality say so. So I come into Ally, and it's a couple different ways you can do it, but the way I like to do it, I like to go into research. And this is specific to Ally, but just figure out how to get to your options chain if you don't use Ally. And in Ally, I like to come to research and then go to stocks. And then when instead of going to options, because if you go to options, it take you straight to the option chain. I don't like to do it there. You know, you can do it there, but I like to go to stock. And the reason why, I can come here and I can look at the chart. I can look at the chart and I can jump in between the option chain. I can jump in between the option chain and the chart real easy on this one screen. I can just jump back and forth. That's why I like to do it in under the research and under stock, right? And let's put in XLK. That's the one I was looking at. Then you just type in the ticker symbol XLK. Here it is. You see it, boom, it came. See how it pulled back way over here. And then Friday, it started coming back. But like from what's this date here? This is from February 16th all the way up until Friday, Thursday, it was pulling back, and then Friday it started bouncing back a little bit. And as you see, it opened up. Remember from like when we was talking about candles, it opened up and it still pulled back real good on Friday. That long wick down there, but it rebounded a little bit. So it's looking like the market from the start coming back. And based on the seasonality of XLK, it is from the start coming back in the near future, which is April. It boom. March, it's like 50-50. April, it boom 100% of the time. So click on options chain, right? And over here you can hit near the money, or you can go, and if you change this here, it just adds more strike prices in. Like if you change it to plus 20, it add more strike prices in, so you can see more strike price. See how the list got longer? If I do near the money, it put in just ones that's near the money. That means what near the money or at the money mean where the asset is selling at the time. That's at the money. Out the money is you're buying something that it hasn't got to that price yet. And in the money, you buying it when it's already in that price. It's in the money. Out the money, they ain't got there yet. Near the money or at the money is where it's selling at. And in the money, it's already past your strike price. So you come over here and I want to do 2-year options. So I come over here, I hit select, and I go down to January 2023. That's the far as out it go for the 2-year options right now, because March ain't came out yet. March 2023 probably gonna come out at quad witching on the 3rd Friday of this month. And then I go to the strike price of 170. Remember I said $170 because it's selling for $128.95 right now. And I did my strike price formula, and I said a good strike price would be $170. So I come here and I go down to 100. Let me add more in here so I can just get to it quicker. I come down to where you see 170, right? And then once I get there, boop, 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 boop. Come on. I probably did it better with the all right, so right there where it said 170, and it's 2 ways you can do it. And let me change it back so I can show you this right here. I like to buy options that got more open interest. Like the open interest ain't terribly important, but The open interest is what it is. It's how many contracts are out there right now. So for the 170 strike, it's 16,870 contracts out there right now. I don't tell you if they buying them or selling them, but the contracts are out there right now. So, and it's two ways you can buy it from here. You can either click here and change that to a B, what stands for buy, and then come down to the right and click on trade, or you can go and click on where it says ask. And ask is mean you trying to buy it. If you click on ask, then it'll pull up the quick trade menu over here on the side. The other way, do the same thing. Like if I come here and put the B in on 170, come down here and hit trade, it opens up the quick trade thing over on the side. And this is just for Ally. And so once you do that, you want to come in and you put in, you got your strike price, and you want to come in, you look at the mid price. The mid price is the fair value between what people want to sell it for and what people want to buy it for, and that's the fair price in the middle. And if you don't know what the mid price is, all you got to do is look at the bid and the ask, add them together, then divide by 2, and you will have that mid price right there, right? So you just come in here, you just say, if I want to buy one contract, put it on one, click on the mid price to make sure it populates there. I always set mine to limit. Limit means only buy it at this price. Market means buy it at any price you can for me, right? And then I always change the duration to day. The GTC means good to cancel. I always change it for day because I only want that to be out there for that day. And then once you got your buy to open, you got your quantity in there, your strike price right, your date right, you buying a call, and then your mid price is right. But the one thing about Ally, when you do a mid price, and most platforms, both platforms I use, these have to be in like numbers of 5. Like if I try to do it, if it says 633 right there, it would give me an error. So I got to make it either 635 or 630. And you can put whatever you want in there. You don't have to use this mid price, because somebody trying to buy it for trying to buy it for $5.65. So I could put $5.65 there if I want to. It's all about how much you want to pay for it is what you put there. And then you will hit preview order. And right now it's outside the hour, so it ain't gonna let me do it. And once you verify stuff on the screen, boom, you just hit place order. And there you go. You in the game. You just purchased your first option contract. And with that, I'm gonna stop sharing my screen and I'm gonna come back to the thing, to the chat, and see if anybody got any question. I'm an options trader. I know I went through it fast, but like I say, the slides gonna be up. Quick recap real quick. Let me pull up my slides so I can see them on my side, and then I'm gonna go back to my oh yeah, I gotta plug my folk. The free assets. Y'all supposed to remind me, Tim, you ain't plug your people. Get Zoom back up. Y'all know who it is. The Come Up series. Check them out on YouTube. Come Up series. Check them out on YouTube. Ian Dunlap, he do a thing with Market Monday. Let me get to the come on. Where my thing at? Oh, my mouse going down on me. Get out of full screen. There you go. There you go. Ian Dunlap, he do a the Come Up series live every Tuesday and Thursday. Ian Dunlap, aka the market, the master investor. That's what he calls himself on YouTube. I mean on Instagram. He do a live thing every Monday with the Earn Your Leisure podcast on Mondays on YouTube. Go to Earn Your Leisure page to see Market Mondays, and the Come Up series page on YouTube. They go live every Tuesday and Thursday. I learned like 80% of the stuff I know about options for them. And then tastytrade.com. That's the one. Tastytrade.com. If you go to the learn page, that's the one. They got a very good free course, and you go through it. It's a video course you go through, teach you about options. They teach you everything about the Greeks. They teach you everything about options. They do option strategies a little bit different from me, but you learn a lot about what those Greeks mean from tastytrade.com. So check them out if you're interested in options and you want to actually trade options. Go and you learn a lot from them. That being said, that's all I got. Are there any questions?
You know me, cuz I'm in the crypto.
Oh yeah. You in you do your crypto thing. Just
Yeah, I
share,
do the
just,
crypto thing, baby.
just sharing a little, the other side of the street a little bit.
Yeah.
Yeah, I have a question.
Yeah, go ahead, Ron.
Is there a minimum amount of time that you have to wait before you sell your car, your contract? Like you stated, if you set your strike price, you see something that you want, you make the transaction. You like to do yours for a year and a half, 2 years out. What if within 30 days you see something, some growth, and you want to go ahead and sell it? Is there a minimum amount of time you have to wait, or can you do that
No, it's not.
within 24 hours?
You can do it the same day. You can do it the same day if you want to. The only thing about with most platforms when you trade in options, most like regulated platforms, if you do more than 4-day trades in a week, you get flagged as a pattern day trader, and you got to have at least $25,000 in your account between cash and assets to be a pattern day trader. But if you can do up to 4-day trades in a week without getting that flag. So if you buy an option contract that expire in 6 months, and 2 weeks from now you hit the target you want, you can cash it in. If you hit the target tomorrow, I've bought an option contract three months out, and I hit my target. I went well beyond my target in 4 days, and I cashed it out. I put on option contracts and cashed them out the same day. So there's no minimum time. You can cash it out whenever you feel. It's yeah. And I'm glad you said that. But one thing you do want to do when you buy an option or buy anything, you want to have an entry and an exit plan. You want to know when and why you getting in, and you want to know when and why you getting out. You should never put on a position and be like, man, is this a good time to get out? You supposed to have that figured out already before you even buy it. You got that. You want to have an exit plan.
All right, thank you.
Yep. Any other questions?
So how do you figure those out? I mean, what do you base your exit and interest plan on?
Okay, your entry is going to be based off of your technical and fundamental research. When you look at the asset, you deem it's a good investment because of the fundamentals. And then when you look at your technicals and see the price performance, and you look at the seasonality of it, and then you decide, okay, this is a good time to buy. That's your entry time frame. Now your entry point is when if you want to use a strike price formula, or if you just want to look at the historical data and say, okay, it did $50 last year. I'm gonna go for an extra $25 this year. You just, you know what I'm saying? And just say, okay, I'm gonna pick a strike price $25 up. $25 up is the strike price you're trying to get to. And then once it get to that strike, you can either get out at that strike price, or you can say, I'm going to keep it for a percentage time. I want to make 100%. I want to make 200%. All of that is part of your plan. Whatever you set down in stone before you even buy the trade, that's what you stick to. So you can do it based off percentage. You can do it based off of your strike price. You can do it based off of, okay, same thing. It's going against me now. I'm only going to lose 10%. I'm only gonna lose $50. I want to make $100. I want to make 50%. You see what I'm saying? It's like you have all that determined in ahead of time, and that's what you use for your entry and your exit. Did I answer the question?
You did. So I think that's pretty clear. But if you are in there and you see that, okay, let me just kind of wrap it up. What you're saying is that you make a decision on what you're gonna buy, what you're gonna do. So then, okay, now I'm ready. And now I've done that, but before I do make this move, I need to also decide what goals I have within this buying power. Yeah. So once I reach that goal, that's my exit power, then I can come out.
Yes.
Okay, yes. Thank you.
Mm-hmm.
Hey, Chubb.
Oh, any other questions?
I have a statement. I just talked to Harry Hughes, your cousin. Mm-hmm. I told him, and he called the house line, I didn't answer. And then I was telling him about, what we were doing on Zoom and et cetera, et cetera. So I'm going to send you his number so you can text him the information, like how to get on YouTube and stuff like that.
Okay. Right,
that's it.
All right. And
why ain't know nothing about this?
We got about 7 minutes left. So if there's any questions, go ahead. But I just want to let y'all know next week is slated to be my last week doing the live Zooms. We're gonna be talking about taxes and portfolio management, meaning like when if it's still going according to your thesis, how to handle it when you go through pullbacks, like we just went through pullbacks, paying Uncle Sam. Oh, we're gonna be talking about stuff like that, because paying Uncle Sam is the most important thing, you know. And I was gonna talk about it earlier in the series, but I was like, I'll wait until we get through everything, and then I'll talk about, like, you know, paying Uncle Sam and portfolio management and all that. I'm trying to, you know, kind of do baby steps with it. And for anybody that don't know, the recorded sessions get put on YouTube, because I'm recording them, and they get put on YouTube under the Tim's Tidbits playlist on my YouTube page. And I text out the link. Anybody that's on here live, I text out the link to the YouTube replay and the link to download the slides. And if you and you can share that link with anybody, because you can download the slides on the YouTube link also. And share the Zoom with them too. Next week, slated to be the last week, unless, you know, y'all got questions and y'all want to do another one, do like a Q&A session the week after that, just let me know. I could put it to a vote next week, and we'll see how we do.
So, Uncle Tim.
Yeah.
What you said that dude name was on YouTube?
Okay, on YouTube, you got the Come Up series. Though they do everything for free. They talk about, like, options is they main strategy of investing, but they teach you everything about the market, fundamental, technicals, everything. They do everything for free. Ian Dunlap, he do a free thing on Mondays called Market Mondays, but that's on Earn Your Leisure's YouTube page. And he on Instagram, his name The Master Investor on Instagram. But he do have a free thing on Monday nights called Market Mondays, and it's real good information they be putting out on Mondays.
Master Investor.
Yeah. All right. So we got about 3 minutes. I'm gonna go ahead and wrap it up. If anybody got no questions. Going once, going twice. Anybody want to say anything before we wrap it up?
Always.
some
Great
crypto.
job.
Do I need a bank
Good
account
job.
with this?
Get some crypto.
Crypto. I might put crypto in the portfolio in a few
Get
years.
some crypto, man.
I'm focused on my options right now, cuz.
I feel you now, but don't forget about the crypto, man.
Yeah. Crypto.
A lot of money to be made over there too now.
Yeah, it's a lot of money to be made in crypto, a lot of money to be made in Forex, a lot of money to be made in futures. But right now I'm just on them options, and I'm options and futures. I'm doing options.
Ain't China just banned Bitcoin?
Man, don't be fooled, man. Don't be fooled by the manipulation.
Yeah,
right.
they say a
But
lot of people hide money in Bitcoins. The big people that need to hide their money.
But yeah, we're gonna go ahead and wrap it up. And to answer your question, D, just as I slide out the door, to answer your question, you can fund your you need a brokerage account in order to buy and trade, sell, buy anything. You need a brokerage account to do it. And you can fund it without a bank account, but it's like a paper trail. It takes longer. You know, if you link it to your bank account, that's the fastest way to fund your account. Because to buy the options, to buy the stock, you need a brokerage account, and the brokerage account is just like a bank account. You see what I'm saying? It's the same thing, and they have multiple different platforms you can do it on. I use Ally, I use Trade Station. So, I just go through with mine so I can show which buttons to click, and I got my reasons why I use the ones I use. But
I use Ally.
Yeah. But
for one of my trades, for one of my stocks that I buy, I use Ally too.
Yeah, I like them because they rates and stuff like that. But yeah, everybody, it's about an even playing field now. It's like, it's like the whole Ford Chevy argument and all that. It's like what you like. Yeah. But as always, man, thank y'all for tuning in. Next Sunday, like I said, we're gonna talk about taxes, portfolio management, and then we're gonna figure out if it's gonna be the last one or if y'all want to do an additional Q&A session next week. But until then, man, y'all know what it is. I'm gone.
Great job. You know you did a great job.
Thank
Love
you.
y'all, family.
Thanks for the information.
Hey, nephew, good to see you.
Yeah,
Good to see y'all.
we had my brother Ron Wilson in the building today. This is his first one with us. I got to put him on blast. This is his
Hey, it's
first
all
one
good,
with
man.
us.
I really appreciate the
That's all.
information. Thanks a lot. I enjoyed it.
Mama, that squirt. I done gave you his government name.
Oh, okay.
But yeah, thank y'all for tuning in, man. Y'all know what it is. Till the next time, I'm gone.
Yo,
Uncle
you got
Tim.
people